This is Scott Bauer with Prosper Trading Academy. During midterm election years, stock markets are typically at their weakest. In the last 100 years, the second year of a president's term, typically that's the worst one for the stock market. Midterms are now here. They're on our doorstep. The odds are starting to tilt towards the Republicans taking both the House and the Senate. So how might this affect the stock market? Well, historically, the market does absolutely like a divided government the best. A divided government not likely to pass any legislation that falls, too far from the center of the political spectrum, which means major legislative packages, maybe higher taxes, whatever it is, are likely off the table, at least for the next 2 years. A Democratic president, combined with Republican control in both houses of Congress, that has produced annualized stock returns of about 8%. The average return in years where the Democrats have held the presidency and both houses of Congress, 10.5%. But the best historical outcome is a combination of a Democratic president and then a split Congress. The returns there have been an average of about 13.6%. Now, one other stat you've got to think about. Since 1950, equities typically trade sideways into the midterm elections, really not different than what we're seeing now, but rally in the months after Election Day. So just remember that. Food for thought. This is Scott Bauer with Prosper Trading Academy.
Go to businessfirstam.com for where to see our show on TV.